Welcome back after the break, ladies and gentlemen. Now I invite you to hear our third discussion panel planned for today. And this one is medium and large enterprises, sources of equity and debt. The participants of this discussion are as follows. Włodzimierz Bieliński, Director of Alternative Investments at PZU. Karol Półtorak, Vice President of the Warsaw Stock Exchange. Marcin Soares, Senior Managing Director and Chief Strategist and BESI. Michał Szwarc, Managing Director at JP Morgan. Takacs, Senior Manager, Local Currency and Capital Markets Development at the European Bank for Reconstruction and Development. And the panel moderator is Marcin, Petrykowski, Regional Head for Central and Eastern Europe at Standard & Poor's Rating Services. Gentlemen, the floor is yours.
Thank you very much. First of all, thank you very much for still being with us. We know this is the panel just before lunch, so we do hope that it will be a lively conversation. First, before we start, maybe allow me to complete a bit of the introduction, because we do have a very distinguished group of speakers here. And in order to put things into the context what we will be talking about, and we will be talking about the sources and ways how large and medium enterprises can, in an efficient manner, obtain financing from capital markets, maybe let me first do a bit of a more thorough introduction to our distinguished panelists to show you what is the experience and what we will be focusing on in the conversation. So on my left-hand side, as mentioned, Hannes. Hannes, as you know, is from the European Bank of Reconstruction and Development. What is worth mentioning that he runs the capital market and equity development side of the business, which effectively means that he has been actively contributing to the development of capital markets in 54 countries so far. So a very well-informed individual that can tell us a bit of a perspective on the drivers behind the development of capital markets. Then, just on the left-hand side from Hannes, we have Michał Szwarc. Michał has been working 20 years within the investment banking platform. He is currently heading up JP Morgan's investment banking franchise in Poland. Before that, Credit Suisse. So again, a very insightful view on the investment banking angle of the business. Then we are joined by Włodzimierz. Włodzimierz running the alternative investments department at PZU. Alternative, what that means? It means that those are the investments which are effectively alternatives towards or against the typical liquid PZU investments, which encompasses investments in fixed income, corporate bond, and equity, among others, working very actively with private equity investors. So that's also an interesting angle that we can touch upon. Then Karol, as you all know, currently the deputy CEO of the Warsaw Stock Exchange, an investment banker. Before that, has been actively involved with the development of the brokerage arm for Citi and also UniCredit. So again, we can also count on a very wide perspective on the capital market. And then last but not least, Jose, a veteran of the equity space, 18 years in equities. Before that, with JP Morgan and Morgan Stanley, has spent a significant amount of time recently talking to investors in Poland. So that perspective can be an extremely insightful perspective that he will today share with us. So with that, more or less, you know what we will be talking about on this panel. Let me draw just a few very simplistic themes for what we want to develop. So the whole concept of the development of medium and large enterprises does I would say revolve around a few competitive advantages, and it is all a matter of what is the most efficient way to finance the strategies that a large and medium enterprises wants to pursue when it is developing. And development can both be around going international, going into new products, accelerating growth, but also refinancing and changing the way it is funding its operations. So that is the key theme that we want to talk about, and there are three aspects that we want to show to you. The first aspect is we want to go through you in detail what are the most popular and most efficient instruments that a medium and large enterprise can use to obtain financing. Secondly, we want to tell you what are the ways to maximize success of the funding strategies for large and medium enterprises. And last but not least, we want to put this into a context of the investors and originators of funding. So what are the investors looking at when considering to finance large and medium enterprises? prices. With that, let me first turn to the first point which I mentioned. It is a recap of the key ways how large and medium enterprises can utilize instruments available on the capital market to obtain funding, both the debt and equity market. And with that, maybe let me first turn to Hannes, asking for his perspective on a capital market wider angle. As mentioned, you have been actively involved in development of capital markets. So if you can do a rundown of the main products available from a high level, and then that could lead us to the other panelists going a bit into detail.
Now, first I have to congratulate the Polish government and the Polish capital market participants for their coordinated efforts to develop the capital market, which was really a great success. And you are seen as the regional financial hub. That is undisputed among the market participants so far. What we see, we have, of course, the classical equity markets, we have the bond markets, and with the small and medium-sized market, which was also established here, you opened up the window for even smaller companies to access capital market financing. But I would not like to focus very much on the standard products you have currently here. I would rather focus on what are the current market trends. What we see that stock exchanges include more and more market segment to cover various target groups of investors. On one hand, we see a clear trend towards private company markets. For companies who would not like to conduct an IPO, do not want to lose control or fulfill higher transparency requirement, we are normally preferred to go the private market route. Additionally, you see the trend to SME markets. And if we speak about SME markets, we have to keep in mind the classification used by the European Union, which would mean that 80% of the markets in our region are already SME markets, which is a fact which is not discussed many times. But that is something we have to be aware of. And then we have a new phenomenon, the so-called equity crowdfunding sphere, which is focusing on more startup enterprises with high growth potential. So we see an upcoming competition, but what does it mean for the stock exchange? At the end, it means for the stock exchange, there is a development potential to really become a hub for large companies, but as well for small and medium-sized enterprises. So the exchange as one access point to capital market financing using different instruments at hand. And we see a lot of new developments when it comes to products. So on one hand, you have new market segments, new markets and platforms established, but on the other hand, we see also the emergence of new products, innovative products. One of the colleagues in the former panel already mentioned yieldcos. Yieldcos are listed companies where the mother company spins off an asset which provides a stable and frequent cash flow. Through listing that company, on one hand, the advantage for the company is lower cost of capital. International research says you can lower the cost of capital between 3% and 5%, which is quite a lot. And it offers the investors the participation in a listed company which offers you a frequent dividend stream, because yieldcos normally pay out 90 to 95% of the profits annually, and we are promising that an annual dividend growth between 10 and 15%. And if you have in mind that only last year the first IPO took place in March 2013 in London, already now 15 companies are listed, quite impressive. Each of them raised between 300 and 500 million US dollars. And all of them have an average market capitalization of 3 billion US dollar. So it is really something which is, I would say, quite interesting instruments for companies. And currently, it's mainly used in the energy sector, but you can also use it for infrastructure projects as well, or any other assets which generates frequent cash flows. Another quite interesting instruments are the so-called listed investment vehicles, which were more or less developed in Canada, where companies conduct an IPO with a promise to acquire from the proceeds a medium or large-sized company. And that product was very successful. So it was used by more than 600 companies, and all of them are listed, and 90 of them even made it to the main market segment, to the premium market segment, meaning developing a clear IPO pipeline for the stock exchange, which is quite important also in our region here. And not to speak too long, a last instrument which is quite trendy now is trade receivables. So we saw the establishment of a trade receivables exchange in the US in partnership with the New York Stock Exchange, and already within the first years, 2 billion of trade receivables were traded, which is a very good instrument for medium-sized companies specifically. Yeah.
Great, thank you. Having that more, let's call it, innovative background on the capital markets and the stock exchange angle, maybe can I now turn to Karol, asking for your perspective from a Warsaw Stock Exchange, mostly focusing on the equity and bond market available, and maybe if you have any comments in respect to the new products, the innovative products that Hannes mentioned, how, what is the view, the local view? I think that would be extremely important, interesting for us to hear.
Sure, thank you. Yeah, I mean, first of all, let me use this occasion to welcome a number of, or a very decent number of both potential and existing issuers from Poland and wider CE region, as well as investors and intermediaries. And it's a great occasion to, you know, to actually address your question with how Warsaw Stock Exchange can address the transfer of capital from those who have it to those who need it, and I think it's not without a reason that as we speak today, it's nearly 1,000 issuers on both equity and bond side that use Warsaw Stock Exchange as a listing platform, as a platform to communicate and with their investors and make that transfer possible. And as we all know, this transfer can be both ways. So, you know, the capital can flow both ways. And out of these 1,000, we have nearly 900 equity issuers and around 180, and there's a little bit of overlap of bond issuers. So we can say that Warsaw Stock Exchange is quite advanced in offering tried and tested instruments, I would say. So equity, you know, in a big scale, and despite a little bit of turbulence on the pension fund reform, I think I can assure everyone that their equity funding or source of equity that can be generated through listing on Warsaw Stock Exchange is still very rich, and I will explore that in a second a little bit more. So that's on equity. On bond side, this is a sector which is or source of funding which, from Warsaw or Polish perspective, is still in the phase of development. I would say in a quite rapid phase of development, because investors are rebalancing their portfolios and are very open to quality bond issuers. So you know, if you consider a bond issuance, please come and talk to us. It's the right time in the era of low interest rates. That's, you know, that's great moment. And we advocate that to our 1,000, you know, clients and issuers as we speak. And that's, you know, that 1,000 companies or 1,000 clients of Warsaw Stock Exchange are here also because of the process of admission, of process of cooperation with Warsaw Stock Exchange is sort of nice and easy to use. The corporate governance is also of, I would say, top quality as per European standards, so we have nothing to be ashamed of. We are very flexible for both very small companies, and we have dedicated market, New Connect, which is very kind of rich in a number of exciting companies and exciting equity stories. Requirements in terms of reporting or cost is all very kind of is all very attractive. So it's a great place for equity and debt issuance. Now, on a little bit more innovative for the kind of emerging Europe. From the emerging Europe perspective, because it's less innovative in developed part of Europe, things like convertible or exchangeable bonds or instruments. This is something which has not been used so far to a large degree, but it's a great great time actually to try to tap these. There are examples already of issuance in these instruments, in equity linked. I think a number of people are thinking of doing this from the community of issuers on Warsaw Stock Exchange. We hope that we will see that instrument developed. Definitely what we lack, and that's to Yieldco proposition, is a decent representation of real estate sector, dividend focused, and that could be actually wrapped up in the Yieldco sort of framework, and that is something where we would see a number of where we would see opportunity for both investors and issuers, and that's definitely an idea that can be sort of structured through Warsaw Stock Exchange. I would also mention the fact that we have now above 50 non-Polish companies listed on our exchange. It's a great number. We hope that this will grow rapidly going forward after the pension fund reform has sort of settled down. We tend to see Warsaw Stock Exchange not as a hub for Polish investors. Yeah? We tend to see the exchange as a platform, as a fantastic actually platform that combines and offers to all companies, whether Polish or non-Polish, and access to all the right investor pools internationally, but also obviously because of the location, we add to our proposition the sort of the Polish capital. So it's a combination that you would not see in any other exchange, I would say. And is that an option to tap? Definitely. So that is something I would flag strongly.
Thank you. We do see that perspective, Warsaw Stock Exchange being an undisputed leader, both in terms of the product and the regional scope. And it is very good to hear about the innovations that are being fueled down to the market. To continue on that angle and also to in a way follow up on what was mentioned about the bond market, can I now turn to Michał, asking for the bond perspective? We've spoken about the regulated bond market, but let's maybe now turn a bit to the high yield environment. Maybe let's talk a bit about the private placement side of the bond infrastructure. If you can, Michał, share with us your view, how does that contribute to the development and the ability of the corporate sector to finance themselves?
Sure. I think when we talk about the capital markets and how corporates can use the capital markets, I think we should first set a scene. And the scene is Polish corporates are working in the environment where we have a very competitive and very liquid banking sector, which provides effectively for most of the Polish companies, which is a good source of capital, it's a good source of cheap capital, in many cases a good source of long-term capital. So I think for many years we have seen that the only part of the capital markets that was really active was equities, where obviously the banks cannot compete because banks are not the usual providers of equity. I think what we see in the recent years is that for different reasons, Polish corporates and Polish financial institutions are tapping the bond markets, and I think you can divide the reasons into a few buckets. The first bucket is the bond markets, and that's important, especially for I would say investment-grade companies. The bond markets provide you with the ability to fund yourself in the longer term. We have seen some of the Polish institutions issuing up to 10-year bonds, where 10-year financing in the Polish market is is almost impossible to obtain. I think you have seen corporates who find it difficult to finance themselves in the local bank market because either their business model is seen as too risky or their policy is seen as too risky, and those companies have accessed very successfully accessed the high yield market, which proved to be kind of more proves to better understand complex credit stories and better understand how aggressively you can move within your capital structure. And last but not least, what we see kind of more recently, we see that a lot of companies who are operating in cyclical businesses where you have relatively big swings in the performance, which are independent from the management of the business, but are more dependent on the kind of global market trends, are trying to tap the market in terms of corporate bonds. And I think the main reason why they are doing it is they understand that the bond market provides you with a more flexible instrument. And what I mean by a more flexible instrument is that what the bank financing does is a financing which is within which the companies are supposed to, on the ongoing basis, inform the banks and meet certain criteria, while in the bond market the covenants are usually of the kind of incurrence type, which is a big difference for those companies that have big swings in their profitability over the cycle. So I think what we can summarize is we see Polish corporates learning how to use the capital markets not only in equities but also in the bonds. I agree with Karol that one area which is totally underdeveloped is convertible bonds. I don't think, frankly, that we will see a lot of Polish or Central European corporates issuing corporate bonds, convertible bonds in any time soon. And the reason behind it is that the yields are very low. And because the yields are very low, there's no point in offering a potential equity upside to gain the financing.
Thank you very much. And we actually have one very successful evidence of a bond placement earlier this year from PZU on the panel. But before we turn to your perspective, can I maybe ask, because we did mention bank financing, so from a BESI perspective, if Jose, if you can add anything to the banking financing angle. I know you have an equities hat on, but still, if you could give a bit of your perspective on the banking financing side of things, and then maybe try to connect that with the equity space, which will also complete the dialogue we had about the equity market.
Okay, I'll try. First of all, thank you for having me again. Last year was my first, this is my second. And I noticed a little bit of a difference versus last year, and I think it will fit in what you were going to say. Last year, I think the panels, they were a lot inward-looking. Maybe because Poland reached a certain level of development, that is, the question last year was, is Poland emerging or developed? This year, I don't think there's any question. And I've noticed that the panels are now a lot more outward-looking. I think maybe it's because a lot of the Polish corporates have the benefit of having a reasonable hub in terms of financing here. The health of the banking system is also versus the outside. And I'm from Southern Europe. I can tell you a little bit about the health of the financial system elsewhere. So it's a lot more outward-looking. Polish corporates have the benefit of having, a capitalized banking system that can do that, and the bulk of the financing here is pretty much achieved that. But the grass is not greener on the other side, and I was here for the past couple of days seeing investors, and the AQR is next Sunday, Sunday Bloody Sunday. I think I remember that song. Some of you may remember as well, not the younger crowd. And it's going to be very, very tough. And I think we're going to have a very tough Sunday, particularly for a lot of the periphery. and that I think will have some negative impact and will make, including the Polish corporates, to be a little bit more creative. So I think we're going to move away from the traditional bank financing into next year. And I think next year, I don't want to bring any bad news because I'm a generally chirpy guy and this is a Friday afternoon, but we're heading for some headwinds. It's going to be very, very tough. We have to be a lot more creative next year.
Well, I hope that's an opportunity rather than a risk for the audience. So with that, can we maybe turn to PZU's perspective? And I think it is an interesting perspective because it has two angles of the story. Not only are you an active investor, a provider of funding to the market, but also you are actively pursuing strategies to effectively, within your alternative worlds, to look for different type of investments. So if you can maybe try to give us your perspective on that, to complete the picture, which will then have, thanks to which we will then have a very detailed analysis of all of the available sources of funding available for corporates.
Well, the topic of alternative investments that I'm going to talk to, well, usually is associated with medium and small enterprises. I think that most of the large enterprises don't have problems with standard financing through capital markets like stock exchange or issuance of bonds. Well, as Marcin mentioned, an example of that can be PZU. We ourselves issued a Eurobond issue last July. It was quite successful issuance of 500 million euro. The reason for that was that PZU is becoming an international company. We are starting to invest out of Poland, so we need some euro exposure. And also there are some other markets in Poland that are denominated in euro, which is, for example, real estate, a kind of alternative assets. So funding for this kind of investments is required or needed in euro. So, as I said, alternatives usually are associated with private equity. Private equity is, as I said, rather for mid-enterprises. The reason is quite obvious. If you want to get a private equity investor, usually private equity investor wants to have control over the company. Well, some people say that, for example, the acronym GP for general partner can be translated as greedy partner. So private equity are usually greedy. They want to have control, but this is quite good for the companies that use this kind of funding. Well, first of all, for mid-enterprises, if a good private equity GP invests in the company, it increases the visibility of the company. So it is easier to get financing from the banks. Usually private equity houses help companies to get external financing from banks. They have quite a good network of investment bankers, so it's easier to gain additional funds. But for that, they want to have the better control, which is also good for the companies because they become more lean, and private equity houses usually introduce high performance management standards, which is quite important for ambitious firms that want to become large. Well, usually they also provide a lot of expertise. They have networks of advisors, of experienced managers from their previous investments. So these are different additional pluses that a company can get from private equity investor. We as PZU like to co-invest and to work with private equity because of these reasons. We feel that if we have a private equity house in the company that we co-invest, there is somebody who has, let's say, hands-on strategic view on the development of the company. which is very, very important for us as the financial investor. But private equity is also, well, it's not available for everybody. Unfortunately, if a company is in a sector or in industry that is not growing, that cannot provide recurring EBITDA, well, it might be difficult to find this kind of investor. Regarding other alternatives, well, you can have, for example, hedge funds. Hedge funds, from my perspective, they are not present on the Polish market. If you review, for example, shareholding of a company like PZU, hedge funds, I think, make less than 1% of the shareholding. Most of the investors are pension funds or mutual funds, global funds. Another interesting alternatives that can be mentioned and don't pertain to small enterprises are, for example, sale and leaseback transactions. This is something that we as PZU also have on our agenda. Well, it can pertain, for example, to real estate, where a company wants to sell its real estate and, well, we lease it back to the company. So I think these are the most important alternatives for mid-enterprises and large enterprises in alternative area.
Great, thank you very much. So we've covered the demand side, we've covered the instruments, we've covered what tools can be utilized by the corporate sector. Let's now look on the other hand side of the equation. So let's look at how to maximize the success that when you are looking for financing, the investor community, the liquidity that we've seen on the market is able or will be keen to take a decision to invest in your projects, effectively extend financing to you. So now the practical views on how to be successful in terms of obtaining financing. Maybe if I can first ask Jose, from your experience, if you could give a bit of a insight into how you consider successful pitches for funding, both from a banking perspective, but also in respect to your wider equity view.
I think maybe I'll see it from this point of view. I think what's happened over the past year is that the level of credit scoring, exigence, standard has gone up. And because we live in a slightly more capital constrained world, that has been the case also for the Polish companies, which means that they really have to justify what the hell they want the money for, okay? And, you know, I remember 5 years ago when we lived in lollipop land and it was very easy to find capital anywhere. Not a lot of questions were asked and, you know, okay, expanding was all the rage and off we go. Today the situation is tough. Today is even tougher because in even financial systems that are relatively well capitalized, because banks want to keep that capital to keep solidity patterns, they don't help the economies grow, which, you know, the problem in Europe is exactly that one. Is the ECB is trying to sustain a lot of the banking system, giving them cheap financing, and banks are not providing it to the corporates, even if their credit scoring is relatively good. So companies have to be a little more strict with what they present. And even so, there might not be the guarantee of getting the finance that they need. Now, you add a factor of risk, which I think is important to consider. That is, we moved to 2015 in a lot of the optimism of the end-of-year trade is still on. Poland is a relatively safe market. It's trading at a premium versus its peers in emerging markets, in line with the developed European peers. It has a very nice dividend yield, so it stopped being a receiver of capital. It's now a provider of capital to at least to the general community of investors, which means that if a Polish corporate wants to really have a formula for success, they have to look elsewhere. They have to look abroad. But they have the possibility of doing so because their visibility is completely different. You know, you look at this region. Poland competes with the Turkish market, with South African market, and you look on the other side, and the investors that you meet every day, the level has also gone up. So now you put the two together, and you will have less projects, less growth, more demand. So I come back to the point of slide one news. The magic formula is getting tighter and tighter. And I think the creativity here is, we have the supranational authorities that will try to help. Well, hopefully we'll have Super Mario providing some liquidity to the market. I think that's a trade that everyone believes will happen. Maybe it will happen tomorrow, the day after. So that level of demand is increasing. And I think the corporates are still believing that it's going to be a lot easier than it actually is going to be.
Great, thank you. We know that you need to leave in 10 minutes, so maybe using the fact that you have the microphone, if you can also elaborate a bit further, and I will then later turn to going back to the subject, but what from your perspective will be the key investors that will be active in Poland and in Central Eastern Europe?
Poland still needs, and I had this discussion last year, I still think needs to think itself as an emerging economy rather than a smaller economy. I always use rather than a developed economy. I use this very example. Portugal in 1996, when I started, I was 5 years old, was an emerging market in the same region as Poland is today. And it went from having 20% of the market to being upgraded by the MSCI to a developed market the following year, and went from 20 to 1.5. You can imagine the time a portfolio manager spends with 1.5% of its portfolio. They just zero it. Today, Poland is a hub, as the Warsaw Stock Exchange has done here in this region. So you have a very well-developed capital markets here, and all the other, I go to Istanbul and ask to see the local investors, and they all want to know what the Polish investors think, okay? Because they are the key investor there. And it is going to be the case next year even further with the opening up of the mutual fund industry. So Poland has switched the dial into, and that for me that is fantastic, and it's going to be the next step. Let's see how the discussion is going to be next year. But they are now key investor in other geographies in the region. If they were associated with the developed Europe, they wouldn't have this prominence perhaps, and it wouldn't be as they wouldn't be involved in such exciting prospects for growth. Also because the European region, the developed European region, I still think it's been the region in the globe with the highest number of earnings downgrades over the past 3 years. So I don't think that they will be Polish investors should be looking for growth in their developed market peers. They should keep their emerging market label.
Or be a hybrid between the emerging world and the development market. Probably that's the best consensus. Thank you very much. Great to hear the BESI perspective on that angle. Now going back to how to maximize the success stories. Karol, if you can maybe comment from a best practices of the Warsaw Stock Exchange, both equity and bond markets. What are your recommendations for a successful placement and a successful project plan to obtain funding from the stock exchange?
Sure. I think that the key keywords are track record and trust, and it's all about building the two. And if you build one and two, then you're probably on the right track to make that equity raising. Let's call it an equity raise, a success. And Marcin, you asked about an example or a case study. I think without calling this by name, not to offend any other of the many great successes in the sense of companies raising capital, I'm thinking of one that did an IPO last year, and that company actually started with a bond issuance in the first place that was distributed to a combination of both international and Polish investors. The company built a track record with these guys, then did an IPO which was very well prepared, which was, and that is also important, that's linked to what I said in the beginning, actually in majority part was sold to international investors community. So that was that right combination of sort of the two dynamics, sort of international and Polish, in one successful IPO. The company then delivered on all the promises that were made on the IPO, and what we see currently is fantastically liquid stock, which, because of this liquidity, is attracting an extra interest from all capital pools globally, I would say. So that story is actually a ready-to-use recipe for successful raising of capital, being debt or equity.
Great, thank you very much. Very practical, and I hope a lot of our issuers will be following those guidelines. Michał, you mentioned that a significant component of funding these days from this part of the world goes through the international bond markets. And the international bond markets seem to be catching up and seem to be becoming more and more popular as investors look for yield and a mixture between risk and reward return. Can you comment what are the factors to be successful in that quite competitive space, and how to approach investors with a robust business case and a story?
I think I agree with Jose, who had to left, that the key thing in capital markets, and whether it's equity or debt, it doesn't really matter, is to have a story that can resonate with investors, that investors understand, and investors effectively know the answer to the question, okay, what's going to happen with my money? How you are going to use it? What is the return that is going to produce? Am I getting a money back if I'm a bond investor? Are there chances that the value of the shares or the value of the company are going up? So I think the key thing is to have a story and explain that story to investors in a very clear way. And I think the example that Karol gave, I think, is a very good example of a very clear and clean story. And I think that company differentiates itself because it has a very clean equity story and very clean debt story. I think I would say this: we are very happy in Poland that Poland and I would say Central and Eastern Europe, or the core of Central and Eastern Europe, which is Poland, Czech Republic, and Slovakia, are viewed by investors as a safe harbor in the emerging markets. So, as you said, we've got the benefit of still a pretty good growth, but we are, on the other hand, viewed as very safe. And that has been even stronger view in the last, I would say, 24 months, with the instability in Turkey, which was a big competitor for capital in our region, and now with the instability in Russia and Ukraine. So effectively, if investors think about Central and Eastern Europe, the only place where they feel comfortable investing is those three countries, where Poland is by far the biggest. So I think almost all the corporates in our region have a tick on that. It's easy. We know investors will like to buy a Polish corporate. I think the key to success is to select the right time in the markets, because on the other hand, in the global markets, I think the name of the game now is volatility. There is a lot of volatility and a lot of instability in the financial sector, which still kind of didn't really fully settle down post the crisis. I mean, what was said is the announcement of AQR and stress test, which is going to happen on Sunday, is effectively still a measure that's taken by the authorities post the 2008 and 2009 crisis. So we are still, I think, in terms of the markets, we are still not fully recovered post the crisis. There's still a lot of post-crisis measures that are in the financial systems, like the kind of U.S. government's, still still in the last month of making direct purchases of the bonds in the U.S. market. And that together with the political instability drives volatility. So the key success is actually to be in the market at the right point in time and to prepare yourself early so that you have that optionality of being in the market in the right point in time.
Timing is everything, and the story is also very important. You can always have it rated, and that actually will also help your translating the story to the investors. And we do have two investors on the panel, so maybe first let me ask Włodzimierz on a PZU as an investor perspective. What do you look at when you really want to fish out the best stories from the market where you are willing to invest?
Well, it's first of all, I would like to explain what is the approach of PZU in general. So we are not looking for the highest returns. We are interested in a good relationship between risk and return. So it means that not all investments are interesting for us. But certainly there are a few factors which are quite important, even not depending on which area of investment you are looking for, which asset class, both in equity or in debt. So first of all, of course, we are interested in companies which have recurring or growing EBITDA, because, well, it's probably the best guarantee that either we will earn a lot on equity or our debt will be repaid in the future. So it means that probably the company should be in a sector with a potential of growth, or in the case of equity, with the potential for consolidation of the sector, which is quite important. Secondly, we are also interested if the company has a kind of competitive or technological advantage, especially if it's hard to copy. Then, of course, the future of the company is, again, assured. What is also very important for us is good management team, experienced management team. Experienced means not only has experience in this particular industry, but also has an experience as a team, which can be both good experience and bad experience. Teams that survived bad times are usually stronger and they know how to behave if there is a critical situation in the future. Well, it's good if such a team has ambitious plans, ambitious but of course realistic, that we can believe in and that we can really value. Well, quite important is also to some extent readiness to give some control for the investors. Especially important in equity, especially important in alternative financing. Usually in this kind of situation, we are to sign an agreement where the managers and the original investors give us some power on what they do in the company so that we can better control that we'll regain our money in the future. Well, basically, I think these are the most important factors. In case of private equity investments, it's also nice if the company has a kind of weakness that can be utilized. So if the company is not fully efficient, for example, or if there are some members of the board missing, or well, if the company lacks some capital or experience in M&A, getting abroad and so on, where a strong investor with a hands-on approach could help. This also maximizes our interest in this kind of investment. And of course, there are some, let's say, themes that are interesting for us, that are interesting for many investors. As an example, we can mention, for example, healthcare. Well, everybody knows that our societies are getting older. Our societies, especially in Central and Eastern Europe, are getting richer. It means that we will pay more for health services in the future. So probably this is a good area to invest. Then areas like agriculture, which are globally interesting. The amount of arable land is limited. The amount of people on the globe is not limited, it's growing, so probably food might become more expensive in the future, though there are different forecasts, of course. Well, IT, this has a very big potential. Everything depends on the subsector of IT. So there are some things which are to some extent obsolete, like semiconductors, simple semiconductors, but there are some very modern, innovative ideas which might be interesting for investors. But then such an investor needs very deep knowledge and know-how on what are the prospects of this kind of innovations. Well, another topic is energy, especially now energy is a very important topic in Europe, so probably investments in this area could be interesting. It looks like there are quite many projects looking funding, and so on and so on. I think that I could list a lot of different areas that might be interesting for us.
Great, great, very, very informative, and I'm sure a lot of investors will be taking those advice very seriously. So, Hannes, can you maybe finish off with an EBRD perspective, and also add a bit of your view, as you have been involved in supporting and facilitating growth for capital markets in the region? What is your perspective on the investor base, from an investor base perspective?
EBRD is a development bank, as the name says. We are focusing on projects where partly also others are in first hand not willing to invest in it. And we have a wide variety of financing options at hand for companies. It starts with investments in private equity funds. We are also quite active here in Poland, and one of the investee companies just conducted an IPO in September this year. So we know the Polish market is working to the benefit of the economy. And of course, we're offering loans and as well as equity and debt instruments for a variety of companies. And all the products are more or less tailor-made. And the process is all the time, it's a standard process in place which goes through different departments of the bank, which thoroughly analyze the business proposal which we receive. But I think what a very important point is to contact the EBRD office here in Poland as soon as possible, just to get a favor what instruments are at hand and if is there a realistic chance to get the financing. As soon as the financing request was received, it will be analyzed. We have different stages of approval processes. And as development bank, of course, we are highly interested to see a transition impact. Transition impact means on one hand, private sector development, can mean upgrade in the corporate governance of a company, which makes it more appealing and more interesting for investors, and maybe also a social, positive social impact. So the transition impact will be analyzed very thoroughly and is one of the key decision makers. If you have a good transition impact, the chances to get a project or a financing approved is much higher. And of course, it's additionality. We have to prove in all our investments that we are additional to the traditional financing sources. It can be that our investments will help to get other investors into the financing scheme or other points. So transition impact and additionality are very important in all our endeavors. Additionally, we have the so-called technical cooperation funds in our hand, which help to, for example, assist in restructuring a company to make it more attractive, to create the investment story as we just heard before. But as I said at the beginning, important is that you get as early as possible in contact with the resident office here to really discuss the project as well as the financing needs you have.
Great, thank you very much. Maybe before we open the floor for questions, can I ask each and every one of you, in a very short manner, just to list a theme which you think will be the key theme for the next year, if for a corporate looking to finance themselves? What would be, from your perspective, a key idea, a key theme that you would want a corporate to consider looking at the timing, we did speak about timing, we did speak about risk-reward, we spoke about the different instruments, so there's a variety of instruments, there's scarce amount of projects, high competition. So from your perspective, what is the key one theme that you would want to convey to the corporate sector for the next year as a theme they should really think about and consider? Karol, if I may start with you.
Sure. It's a good question, actually. Thanks for that. I think that the theme for the next year, that I would see important for corporates, is using the window for making your financing structure a combination of equity and listed debt. So if you're an equity issuer, do consider having your bonds listed as well and capture the benefit of trust and track record that you have built with investors. Likewise, if you're a bond issuer, do consider an equity listing because, again, you would get the same benefit. So that is something which in the era of low interest rate is and should be the right thing next year. Yeah.
Perfect. The optimal mix. Włodzimierz?
Well, actually, it's a very difficult question for me because our scope is quite broad. So we are interested in debt. We are interested in equity. Well, I think that it's too difficult to explain. I would say for me, we simply are open for any investment, especially for things which are not cyclical. Too cyclical investments are regarded by us as risky. Probably a good time now for everybody is debt, but for us, from the point of view of investors, that is not the best what we can invest in right now.
Of course, so optimal mix. Elimination of cyclicalities, let's call it that way. And then, Michał, over to you.
Unfortunately, I will repeat myself because I think what we're going to see next year is we're going to see even more volatility, exactly for the reasons which I mentioned, which is some of the measures taken by the government to stabilize the financial markets will be over next year. At the same time, we're probably going to see a higher interest rates in US. We're probably going to see a slowdown of economy in Europe, and we're probably going to see more and more political tension, which I think, adding all those together, you can expect a high volatility in the markets. So if you want to come to the capital markets next year, get prepared early and be ready when there's a right market window, because those windows next year are probably not going to be open as wide as they were this year, especially in the first half of this year.
Great. Optimal mixed debt to equity, elimination of cyclicalities, timing, mitigation of volatility, and preparation. Hannes, your finishing touch to this recipe for success.
For the next year. No, what I can see, based on the changes in the regulatory environment, for example, the new European Union Directive MiFID II has a clear focus also on SME growth markets. So this will open a new window of opportunity for small and medium-sized companies to access easier capital. It will increase competition on exchange level because private small and medium enterprise growth markets will emerge. And additionally, I think the most used instruments maybe next year will be asset-backed securities.
Great. I think we've mentioned two very key important points. One is preparation, second is timing. I would like to draw your attention that we are exactly spot on at the end of the panel, which means that we've prepared very thoroughly and the timing has been managed well. So thank you for that. But with that, I hope our organizer will still allow us to open the floor for one question from the audience. If there is anyone that would want a comment from this distinguished group of experts. I think you are extremely diligent in your talks and there are no questions, which hopefully is a good thing. with that, as we are right on time, I can only finish. Thank you very much, dear gentlemen, for the very insightful perspective. I think we have learned something new today, and there is a analysis, a recipe that we can leave and hopefully aim to be some kind of an aftermath of this panel for others to follow and for others to inspire. And so thank you very much. Thank you, dear audience. And with that, probably lunchtime, isn't it?
Exactly. Thank you very much, gentlemen. Ladies and gentlemen, that was the last session of today's conference, and indeed also the last event of this year's conference. I sincerely hope that this conference really met your expectations, not only in terms of the knowledge gained, but also in terms of promising business contacts. I also firmly believe that Warsaw will be the city to which you will return, and not only to take part in next year's edition of our conference. So thank you, ladies and gentlemen. Let me now invite you to have lunch, and then enjoy the rest of this beautiful, though frosty day in Warsaw. Thank you. Goodbye.